today we're going to be going over how to choose the best S&P 500 investment. I was inspired by this article right here, and I'm going to be adding an extra one to the mix. If you're looking to grow your wealth with the S&P 500, you've probably come across many names that we're going to be taking a look at today. But which one is the right one for you? And does it even matter? In my opinion, yes, it does. And that's why we're going to be taking a closer look at a few funds. So by investing into the S&P 500, you're giving your portfolio diversification, exposure to those top 500 companies. And one thing that we are going to be considering is the expense ratio. What that is, the fee that you pay for administrative and other operating costs when it comes to these type of funds. So in today's video, we're going to be reviewing SPLG, IVV, VOO, the SPY, and one of my favorites, FXAIX. I am Lisa J. Stocks. If you're new here, make sure to subscribe, like, and hit that notification bell. So first, why the S&P 500? It is a big deal. It tracks those top 500 companies. Think Apple, Amazon, Meta, Microsoft, and so many more. It's weighted by market cap, so those big companies like NVIDIA are the heaviest weighted. It's been a go-to for building wealth for decades. The S&P 500, along with the other indices, have been hitting all-time highs over and over again, and it has proven itself that it recovers after those tough times. Over the past 10 years, funds like VOO and FXAIX have delivered an annualized return of around 13%. So that's steady growth. All of the funds that we are going to be taking a look at all track the same index. So why are there so many? And how do we go about choosing the right one? It comes down to a few key differences that will affect your returns, taxes, and depend on your investing style. So today we're looking at 4 ETFs and 1 mutual fund. So our ETFs, exchange traded funds, are SPLG, IVV, VOO, and SPY. They trade like stocks during market hours, great for flexibility and tax efficiency, and you're able to buy fractional shares on many brokers. And then our 1 mutual fund that we're looking at today is FXAIX, which trades only once per day, is ideal for long-term hands-off investors. And when it comes to these type of funds, you may occasionally get paid out capital gains distributions. So overall, ETFs tend to be better for tax efficiency, while mutual funds may be better suited for your IRA. So here's a look at the funds, showing you the issuer, the inception date, and those expense ratios that I was talking about. So you see here that SPY and SPLG are both under State Street, but the expense ratios are drastically different. SPY is the first ETF ever created back in January of '93. It has an expense ratio of 0.09, while SPLG has an expense ratio of 0.02%. IVV and VOO both have 0.03% expense ratios, and our 1 mutual fund, FXAIX, which you have to hold over at Fidelity, has an expense ratio of 0.015%. So this matters. Even those small differences will add up over time. Let's take a look at this example based on investing $10,000. FXAIX would have you at the lowest expenses at $1.50 per 10,000. SPLG, $2, IVV and VOO at $3, and SPY at $9. But this is just a $10,000 example. Think about the numbers as your portfolio grows. Once you're at $100,000, now we're looking at $30 versus $90. So if you are a long-term investor, put some thought into it because it adds up over time, and we want to have as much of those returns staying in our portfolio as possible. So I'm currently investing into 2 of these funds, one in a taxable account and one in my IRA. The first one that I started investing into was VOO. With that low expense ratio, the flexibility of trading it, and that reputation of Vanguard behind it. So as I mentioned, the average rate of return is about 13%, but past performance does not guarantee future performance. But this fund has had a long track record, and you're getting that diversification of so many different companies, so many different sectors, that's going to help you weather the storm when it comes to the ups and downs of the stock market. Here's a look at my VOO position. I'm currently up 35.45%, getting close to 20 shares. My average price is $433.72. And when it comes to FXAIX, I have about 745 shares in this portfolio, and I'm up 38.06%. So now let's get back to which fund is right for you. If you want the absolute lowest fees and don't mind going with a mutual fund, you can invest into FXAIX with that 0.015% expense ratio. If not, SPLG at 0.02 is our lowest cost ETF that we've taken a look at. But if you have a preference for the issuer, Vanguard or BlackRock, if you have account there already, you can definitely go with VOO or IVV, which are just slightly higher at 0.03%. They have a strong track record and are also great choices for the long-term hands-off investor. And in my opinion, if you are a trader, that's my go-to when it comes to the SPY. All of these other choices are better suited for investing. But if you need high liquidity for short-term strategies, like with our options trading, SPY is a go-to for many. Ultimately, they're all nearly identical. Some other differences that I wanted to touch on are the dividend yield. Overall, they're very close. I averaged them out here and we have 1.18% dividend yield. And I believe all of them pay a quarterly dividend. Another difference that often influences some investors that have a preference for a lower share cost is that SPLG's currently $75.54 per share, while VOO is $590.30. IVV is $645.28. And our mutual fund, FXAIX, is $221.54. So when it comes to SPLG, in addition to having that slightly lower expense ratio, you'll be able to see your share size growing more quickly, which is a plus to some investors. So when it comes to performance, they're all going to be nearly identical. Those fees, excluding SPY, which, as I said, is a go-to for traders more so than investors, they're all quite similar, but you can save a little bit there when it comes to those fees by choosing SPLG. Consider the tax efficiency, but overall, the most important thing is to get started investing. When it comes to the S&P 500, which one are you investing into? Or are you still trying to make that decision? Make sure to drop me some comments. If you found this video useful and helpful, give it a thumbs up. Make sure to subscribe. Check out my referral links. Thanks for watching. Okay, bye.